I just made $7,000 day trading SPY. I'm going to show you my exact entry I did, the exact exit I did, and how exactly you can do the same thing as well, along with giving you the understanding that I knew the market was going to go up so I could make money from it. So if we go to Thinkorswim, this is exactly what happened. I went to SPY ETF on the 5-minute chart for that day. This was Tuesday, February 4th. And I basically did the following. Very early in the morning, I like to identify a major supply zone, especially if I believe it's going to continue to rocket upward. So at 598.29 over here, this was before at least 850 anyway, the first time a zone was actually formed on the day. And once I did that, since I knew the market was going to go up, I basically said, cool, I need to find a potential entry point with a small stop loss area to give me a better advantage so I can go up. And you may be wondering, well, why the heck did you break one rule? Because one of my rules is that I don't like to trade before 9:30 a.m. CST, which is right here. Because clearly my entry point, which I'll walk through in a second, was over in this area. And you're saying you entered at 8:50 and exited at 9:40, 10 minutes after when you usually would actually look at the market. Again, I'll get into it very soon, but you have to keep in mind if your entry actually lines up and you know what almost certainty the market's going to go up in your favor based off of your analysis, just get in. Don't let the technicalities of how something is supposed to work hold you back from making money. Because keep in mind, you're here to make money, not just always 100% be completely a rule follower, as it is. As interesting as that is, right? Because of course the rules help you make money. But if you know based off of the rules that you're looking at that you can make money still, go ahead and just make the money. So anyway, this is a 5-minute chart. And this is the 1-minute chart of where the entry was. This is where that zone was that we talked about earlier. And you can see how things were. It was a weird trade, but it went over, came up, and in my eyes, it has that little bounce here. And excuse me, let me move this over. It's over here. There we go. So it went over here, came down. To me, this is our zone candle, reversal, confirmation, and our entry candle right here. And you may be looking at this saying, well, this is a green candle versus, but the zone candle is supposed to be red. Same thing, right? If you look at this, sure, the body is actually green, but majority of the candle actually was red. Majority for 40 seconds of this, especially when I was looking at it, it was actually a red candle. And then the reversal candle was higher than that, of course, which is fine. And the confirmation candle was higher than that. And the entry candle was way up here, essentially, being higher than that. So in order for the candles to work, the color doesn't really technically matter again, right? It's just directionally, are you correct? Because as we know, I mean, look at this. This is a perfect example over here. This is green, green, red, green, green, red. There's two reds in the way, but it's visually going up, so it doesn't matter, right? Now you could even look at this as green and this is red, but it's still above the previous green. So like if this was a candle of counting them to say in the upward direction, this red candle is higher than that one. So again, it doesn't matter. As long as you're correct directionally, you'll always, always, always make money. So I entered here and I exited. I'm going to show you much more detail soon in just a second. Over here in this little specific spot, I believe on the following red candle right over here. So I entered it at about, was that 598.88, exited somewhere over here at about the 601 give or take area, 601.8 or so. So pretty far of a move for the 7K in profit. And so you still may be looking at this and saying, okay, well, this was before your 930 of a typical trade. The ZRCE was not pretty. It was kind of like, what else gave you the confidence that this was going to be a winning trade? Well, I'll give you two things. A, if we go over here from a bigger picture perspective, I'll zoom out a little bit for you. This is the hourly chart. Ignoring the zones, because I covered that in my Monday weekly review video and also Wednesday weekly review video. You can check this out. You'll notice that this, let me zoom in a little more for you actually. This was Monday. Keep in mind today's Wednesday. This is Monday. This is Tuesday. This is Wednesday. Yesterday was the trade that I ended up taking. So if I just show you where the yellows are, switches the video, the yellow where my entry was here and the exit is over here, right? In this little specific spot. Put this back to daily. So the reason I knew this was going to go up is because if we look at the previous day before that and before that, we had the high over here. It had a huge gap downward, and we created what I like to look at, from a body perspective on the hourly chart was a low, where that candle is essentially. And then it went up and it came over here to this little spot over here for another low. But this low is higher than that low. So it's like, okay. And then when it closed, essentially, followed by the morning candle, it closed with a higher low. And keep in mind, my entry was basically here. So I had the theory in mind to say, okay, it was a huge gap down from the day before, from freaking, what is that, like 601 to at the lowest 590. Of course, it's going to bounce for one, not getting into other higher time frames, but it's going to bounce. Two, we had a low, we had a higher low, and we had a higher low by the closing, and by opening, it was also still in that spot, and it looked like it was going up based off of that, remember, 5-minute and 1-minute chart. So then I said, okay, if it continues on, then if from a 1-minute chart perspective, I'm entering in this little spot over here, right over here, and my stop loss will be here. And my take profit in this scenario will be about in the 601.75 range all the way up here because it's hitting this next zone. And if we zoom out, we go up here, what did I say, 601.75. It's about right there. So I was willing to lose this amount in order to gain this amount, which you can see it did get to at a certain point in time. Let me actually draw it over for you. Over to here, right? It did actually get to it. So if I would have held it longer, sure, I would have made the money. And I believe it hit it. Yep, hit it, and it fell down later on. It hit the spot. But for me, I got out from a visual perspective because I was like, okay, it went up. It was perfectly going up. It was up a good amount of money. Went down. It's like, okay, that's fine. Went up a little higher. Okay, that's great. Went down. Okay, that's interesting. Oh, it's going to go up again. Oh, it fell down lower. Crap. Okay, I lost a good amount of profits. Then it finally went up. Got in this little specific area, started pulling back, and I'm looking to the left. I'm like, okay, there looks like there's an issue here. It looks like it's going sideways. So sure, my TP is up here. But this scenario, worst case scenario, I mean, is it so bad if I only exited right here? So still, I'm willing to lose this amount in order to gain that amount. Great risk to reward in my eyes. So I sold it for the win here of the $7,000 that I showed you initially. Went down, and then finally did go up. So if I was patient, this wouldn't be 7K. This might be, I don't know, 8.5K or so, maybe 9, give or take. Depends. So I mean, it just goes to show you, A, I mean, everyone still makes mistakes, but B, it's like patience is really a virtue in this scenario because if you do wait, stop looking at the chart as much, it does go to the spot based off of the analysis. But you still may be looking at this and saying, okay, well, is there any other confirmation? Because what if I wasn't looking at the hourly chart? Well, a couple things. One, let's actually go deeper with it. On the hourly chart for the next day, for Wednesday, I didn't take this trade. I mentioned this trade, and other people took the trade based off of this, but we had the low. Well, we delete that because that's what the entry was. The low here. Then we had another low, it's higher. Then we had another low based off the two candles. Ignore the wicks, by the way. Wicks are just wicks. Who cares about that? Body, it's higher. It was showing an upward trend, and then it went up. Bunch of people made a bunch of money just from this logic alone. But bigger picture, go to the daily chart. 2 year, 1 day. Right? Bigger picture on the daily chart. You can see it went from this spot, big old high, highest of all time, to a low. Tried to go to a high of all time, but it's a little bit lower than that guy. Then it went a little bit lower. And so logically, if it's doing from up here to down here to up here to down a little bit lower, I mean, clearly it's going to, you see how short of a distance these are versus how short of a distance these are. It's going to bounce up. It has to do that. Everything, it always does a down, up, down, up, down, up. Boom, up, down, up. It's just a matter of get in there. So like you could have taken the trade off of this bounce. You could have taken the trade off of this bounce. You could have taken the trade off of this bounce. It was gonna go up. It's just a matter of where is it stopping? Because sure, it could stop here. It could stop a little bit below the wick of here, or maybe it won't stop. It just keeps going. I don't know. But I'm not in the game of getting necessarily always the rejection. I like getting the continuation of the trade based off of the bigger trend of maybe the daily chart, followed by a smaller trend of maybe the hourly chart if necessary, followed by pulling it all together and going to that chart tab on over here from a day trading perspective and say, cool, I mean, it's going up, so let me find an excuse to do a call and just get in the trade. I mean, and, and that's literally just the logic of it. Like this is, you can almost call this a quote unquote advanced trade, if you will. But if you didn't like that trade, that's fine. Because again, if we go back to it on the daily chart, and all it did for the past 3 days was go up, then any day, any of these times, at any point in time, if you would have bought a call based off of any logic that I used here, you would have made money. And that's based off of almost any time frame we looked at. So you got to ask yourself the question of, are you using big time frames so you can do the micro trades to make $7,000, or are you only using the micro time frames, getting chopped around, doing a whole bunch of trades against the bigger trend, and you're losing because of that? You need both sides of the picture to get the easiest trades possible.